Hey everyone, welcome back to a little bit delayed market open. I have to say that it was really awkward when Jack is actually the reason I'm here right now because Jack came in at like 6:38 and he's like, "Mom, why is Dad not awake yet?" Like, what? How does he know? It's pretty awkward. Okay, it's even awkward to admit. So what we're gonna do instead of listening to me right now is we're gonna go over here and let the awkwardness fade and listen to this SPAC spookness.
Yes, she did. If an EV Leaf blows into her desk, she'll buy it. And I don't mean that as being any slight at all. That's something Larry Kudlow used to say. It would be like, and that person really doesn't know anything. With all due respect, that person is.
So, okay, while Jim freaks out here, I was just listening to Jim. He's actually talking about one of the reasons SPACs are having potentially so much of an issue right now is potentially because the SPAC market is undergoing some new regulation via the potential Biden administration. He kind of drew this parallel between the Trump administration having this anything goes attitude with the SEC and the Biden administration having more of a regulator in place where potentially the Biden administration's SEC chairperson is much more interested in cracking down on these wild projections that SPACs put out, or cracking down on even the use of warrants, which a lot of existing SPACs use. And so a lot of, in their mind, SPACs are undergoing a substantial amount of pressure because of this SEC regulation or potentially microscope that SPACs are now under, which is casting this doubt and uncertainty under current SPACs. And you can see that. I mean, anything right now associated with SPAC, the good ones, the okay ones, the bad ones, they're all getting obliterated. It's pretty bad. What is still going to the moon, though, which is absolutely incredible, is Doge, which if you have not yet, I encourage you to watch my video last night on Doge, especially, understand the three different types of Doge buyers you've got: the hodlers, the traders, and the people who are like, oh my God, I got life-changing amounts of money and I don't know what I'm doing. So take a look at that. But this is pretty incredible. I mean, we are at we just hit a high here of 0.46. Almost got to a $0.50 on Doge. Absolutely incredible. But let's go ahead and see what's going on in the market. Look at this. So we've actually got Riot Blockchain here down again. It's almost kind of like all of the crypto-related stocks are actually having more pain after the Coinbase IPO than less. I mean, that's pretty incredible to see Riot down again 10% when it was down 15% on Coinbase IPO day. You know, it was up a few percentage points yesterday, but this is another big move to the downside here for crypto mining stocks. Crypto-related stocks just really getting beat up after that Coinbase IPO. Not so good. You had BNGO, another momentum play, falling again here, 10%. Marathon also, crypto mining down almost another 10% here. For some reason, Pinterest is down. What? That's odd. Yeah, and I don't even see, let's see. I don't even see why Pinterest might be down here. Pinterest has been up for a period of time. Here Pinterest has sort of had a nice recovery. I've been saying, hey, in the 80s, like, I don't like adding to Pinterest. It's kind of like, when CCIV was like $40, $50, $60, I'm like, this is too much. Like, but my thing with CCIV was always like, oh, I like it like 30 and under. Which I realize even 30 is upside down now. I mean, I think the thing's at like $19 right now. But sometimes stocks can just run to higher levels, and we look at those higher levels. It's like, okay, it's a little stretchy at this point. So Pinterest at under 80. I prefer it under 70. So I don't. If we're gonna have a downtrend on it, I'll wait for it to fall under 70 again. Maybe add to it again. Sundial is now down at 78 cents. I mean, just the momentum stocks just getting absolutely obliterated. Just destruction here. Poshmark down 6%. Poshmark just been on a horrible downtrend as well. Ethereum's down 6% today. Microvision down yet another day in a row. Open Door, another SPAC at 18. EXPI down to 36. We really started buying EXPI at 42 before the split. Had a 2-for-1 split, so 42 right now. It puts it at about 72. So it's still up from there, but I definitely did some buying of EXPI when they announced the split, and the thing was like 77 or something like that. So some of my latest buys are upside down on EXPI. Some of my earliest buys are still almost a double. But yeah, EXPI has just been getting torched. And you wonder why, too. It's just absolutely bizarre why you see this continued pain here. Look at that C3AI. We thought for a moment, hey, we got a couple green candlesticks here. This is one to pay attention to. Back to red again. Even Upstart. Back to red again. Bitcoin down 3% here. And personally, and I talked about this in the Doge video yesterday, it would not surprise me if, as you see Doge moon the way it is, every other momentum play becomes much less sexy. Right now, it's Doge. I mean, you could have bought this thing yesterday at a quarter and been almost up $1 this morning, which is insane. And again, I never want people to go, oh, Kevin told me to sell it. You got to ask yourself. What are you? Trading, hodling, or if you got life-changing amounts of money, does it make sense to consider selling a little bit? So those are the questions that you got to ask yourself. But life-changing amounts of money are good to take advantage of. This is incredible. Now it is going to be very popular, I think, on social media for people who have lots of money, who it doesn't matter to go, hodling Doge forever. Doesn't matter, adding more to it. Keep in mind people's positions too. And I just always want to have that devil's advocate. Again, not saying sell, but I want to have that devil's advocate that, if there's somebody with like a multi-million-dollar portfolio and they got, $100,000 or whatever on Doge or maybe even more, it doesn't matter to them if it all evaporates. Somebody making 50 grand, if they're up like 500 grand, you scratch your head a little bit if you don't take at least something and start paying off some things that would change your life. Anyway, okay, enough about that. Just under 0.4 now. So we got Clover, Big Digital, DraftKings. Let's see here. Some green, not too much. Okay. Okay. Let's see. Hey, look, Very Good Food is up 1.67% today. I interviewed the CEO yesterday. I wanted to also just make something very clear, just because there have been some comments about this. So there have been companies that have paid YouTube creators for interviews. I want to be very clear that on my channel, I have never and will never accept a dime for an interview. And I also won't pay for an interview. So any interview you have ever seen on my channel is A, not paid, and B, I'm not paying for it. And that will always be the case. So keep that in mind. Interviews, and honestly, I don't even do sponsored videos. I've thought about doing sponsored videos, but it's a pain in the butt because they want like approval and stuff. The most I do is check out my course or get 2 free stocks on the Buggy Weeble. I mean, look, I use Weeble every day, so obviously I like it. But yeah. All right. So anyway, BNGO accelerating its losses a little bit here. So is Pinterest. A little odd to see Pinterest to doing what it's doing here. So let's see here. Okay. Okay. Wow. Sorry. Okay. Let's jump on here over here for a second.
We're 30 minutes into the trading session. Here are the three big movers we are watching, starting with Morgan Stanley, posting blowout results in what has been a blowout week for the banks in general. But Morgan Stanley did have $911 million in Q1 losses tied to the Archegos fund meltdown. Shares are down slightly right now. We're also watching our parent company, Comcast. Raymond James upgrading the stock to outperform, telling its clients to expect strong results when Comcast reports on the 29th of April.
Comcast.
And we continue to track, what else? Coinbase. Kathy Wood's ARK funds buying more shares of Coin, purchasing 110 million of that stock. You can see right now shares are up about 1.5%, trading around 327, 328 a share. Meantime, consumer sentiment is out right now, and Rick Santelli has that for us.
Oh, perfect.
Yes, these are April preliminaries. So in a couple of weeks, we're going to get the final numbers and toss these. They're pretty strong. If we look at headline number, we're expecting 89. So the whisper number was larger than the 86.5 that just popped on the screen. But the interesting thing is in order to find a higher number than 86.5, should that be the final, you have to go pre-COVID. It was basically March of 20 when it was 89.1. So that is a good number, even though it's less than expected. Current conditions, 97.2, very powerful number versus 93, our final read last month. And if we look at expectations, 79.7. This is a big miss based on expecting a number more in the mid-80s, but it's exactly the same as our final look for last month, which was 79.7. Now, here's where it gets interesting. Our one-year inflation jumped to 3.7. Well, 3.6, last time we had that was 2012. So that number goes way back, and 2.7 on 5 to 10 year. Well, we've already had 2.8, which was the highest since 2014. So that in a way moderated with 2014 a while ago. So we want to pay close attention to these inflation data points, especially when we get the final read in a couple of weeks. Carl, back to you.
All right, Rick, thank you. That's interesting stuff. Rick Santelli, we've obviously been watching the bank earnings all week long. Goldman Sachs, JP Morgan Chase, Wells Fargo delivering what's been a pretty bullish economic guide. With more reaction to the earnings, let's bring in Pulitzer Prize-winning columnist for the New York Times, Jim Stewart, normally joins us on Fridays. Jim, great to see you again. Good morning.
Good to see you, Carl.
That's interesting. Consumer sentiment lower than expected. And I just got another note here. Oh, this is actually good. Wow. Okay. So there's actually so consumer sentiment just missed a little bit. Personally, I would not be surprised to see consumer sentiment start declining over time. Let me pull this up. Okay. So, and the reason for that is I just think we're in a little bit of this frugal decade, and I'm always looking for reasons to say that I'm wrong, but this kind of reiterates that frugal decade. Not only are we seeing a deleveraging, which I talked about yesterday. If you haven't seen that video yet, watch the video. How long will the crash continue? That's a video where I break down why I think index funds are up while certain momentum stocks and higher PE stocks are down. Watch that video. There's a lot of insight in on that one. But the University of Michigan puts out these inflation expectations, and they've consistently had a measure of people thinking that inflation 12 months out is going to be around 3 and a bit, and that 5 years out inflation would be around 3 and a bit. Well, new numbers just came out. The new numbers are that 12-month inflation is expected to be 3.7%, but 5 years from now, people believe inflation will be down at 2.7%. So pretty interesting. So a little bit of bottom line there, a little bit of a decline on inflation expectations over the next 5 years. So I don't know if that's because people believe that the Fed is going to rein it in, or if people just think the prices will come down. But I will go ahead and pull up that data beyond the little alert that I got. Oh yeah, 5-year inflation expectations. I'll find it. But anyway, let's go ahead and in the meantime, jump back over to the sticks and see what's going on at the sticks. So hold on one sec. Okay, so look at this. Just a continued deceleration here. Maybe Oh gosh, it's possible some of these are actually reacting to these consumer sentiment numbers as well. Consumer sentiment goes down. It wouldn't surprise me to have some retail go down, but look at it. Wow, just bizarre. Dogecoin still at 39 cents. We've got Enphase up fractionally today. Not a lot. Oh, let's see here. Let's go to the watch list here. So Workhorse is up today, but Workhorse has also been in the toilet. So I mean, this is just like a momentary relief for Workhorse. But mostly, I'd say today, I mean, the Dow is, of course, up 1/3%, while at the same time, it's like you've barely got things up. I mean, I think you've just got the really heavy stocks like a Home Depot. Let's see where Apple is, for example. These guys doing very well right now. But, yeah, oh, no, even Apple's down today. Wow. Amazon, let's see, Amazon. Anything high PE is getting so underestimated right now. Even Amazon, yeah. So anything with a higher multiple, really, it's just been red. Anything. And DraftKings had some phenomenal news yesterday, becoming the official NFL partner. At least I believe that's the detail that I was reading about. I can double check. I don't know much about the online betting. I wish I knew more, but let's just pull it up in Bloomberg. So let's go on draft. Let's get some more exact details. DraftKings. So I actually downloaded the app yesterday. I've never downloaded it before. It looks really cool. Yeah, let's see. Yeah, NFL sports betting deal. NFL becomes latest major league to embrace online sports betting after signing $1 billion deal with websites FanDuel, DraftKings, Caesar Entertainment, all of which will use league data and trademarks while gaining a presence on NFL.com and the official NFL app. Nice app spelling there. But yeah, great news for DraftKings. It's just tough on a day like today to see pricing go up for DraftKings because it's pretty bloody out there. Yeah, keep in mind DraftKings too. Not actually expecting positive earnings until like 2024, which people don't like right now. People right now are definitely wanting. They're wanting their they're wanting their cash flows. Or okay, sorry. So, what else do we have here? I want to pull up Bloomberg Live as well. Give me 1 sec, guys. Let's pull up Bloomberg Live. The actual market itself is not looking pretty. Coinbase barely holding on to some gains here. Bloomberg Live's on commercial. Let's see. Okay, let's see what we got over here.
Powell's rhetoric that he is not looking to raise rates this year. That creates liquidity. Liquidity drives markets. There's a ton of cash on the sidelines, trillions in the hands of consumers, all-time high levels on corporate balance sheets, and that needs a place to go because rates are low. It's going to go to stocks.
Is there any alternative? I'm using the expression TINA, T-I-N-A. There is no alternative. Well, is there an alternative to melt up stocks?
Well, there's always an alternative if you're willing to invest in a relatively low-yielding bond market that at least at best has been flat for investors. So people have turned into short-term thinkers, right? With the 24-hour news cycle and tweets and hits, we want immediate returns, and clients don't have managed expectations right now. Investors want quick returns, and a flat bond market doesn't excite them. The alternative is risk assets. This is not new.
Yeah.
Bernanke started it in 2008 when we began this huge quantitative easing and rate reduction. So unfortunately, investors, even moderate risk investors, are stretching their risk appetite and going to stocks.
That's exactly what's happening. Mark, thanks very much for joining us. I'm sure we'll see you again soon. Thank you very much, sir. Appreciate it.
Good to be here.
All right. Dow is now up 142 points, and I think the S&P's up as well. Who are the big movers, Susan?
Let's start with Morgan Stanley, because, they reported better earnings and profits this morning.
Down.
Here. In fact, the stock was down over 3% at the market open just about 40 minutes ago, recovering a bit. And the reason the stock is down is because Wall Street was surprised and disappointed when Morgan Stanley announced a $900 million loss from the Archegos $20 billion hedge fund blowup just a few weeks ago. Now, Morgan didn't specifically say it was Archegos, but I think it's pretty well illustrated that they lost money on that that hedge fund meltdown. Sunrun,
which, by the way, I want to mention this. Some folks have been asking me, like, what do I think about the implications for the Archegos disaster and like the broader market? Something that's been really incredible, and Kathy Wood touched on it as well. And I've seen some other folks touch on it as well, some analysts. Something that's been really incredible about it is folks say that if there was going to be an implosion or sort of a big risk pullback after the Archegos disaster, it would have happened already. And the fact that it didn't is actually a really good sign. They're talking inflation expectations over here. Let's hit this really quick.
Yeah, the jobs picture is improving very sharply, likely to continue to improve very sharply in coming months. The level of unemployment and underemployment is still very high. So I think that means it can continue to improve over, a longer period. And I think that often, and we see this in some of these surveys, households and workers are more focused on whether things are getting better or worse. I mean, the situation is still not good from a levels perspective, but it's getting better quite rapidly.
So, but based on that, what was also interesting is he made the distinction between older generations that have more savings are more inclined to hold on to it because they see more risk versus the younger generations that don't have as much savings, but that don't see as much risk. They'll spend it. If we look at spending sort of bifurcated like that, how does that feed into GDP? How does that help or hurt the economy?
I mean, $1 spent by an old person is the same as $1 spent by a young person. So, to a first approximation, you probably want to take the average. But if you have young people be more willing to take some risk effectively, and if that also translates into other things like starting businesses, for example, I think that would probably be a good thing. But just from a spending perspective, it's really just the total number of dollars that should matter. So
spending is basically what you're saying. Right. Okay, so you're obviously, as I mentioned in the introduction, pretty positive on growth. You're looking at unemployment falling to about 4% by the end of this year. Inflation's going to remain limited, kind of stay in check, et cetera. And I'm wondering if you feel, how does that measure up with what we've seen in the bond market yesterday in terms of where we are in yields and sentiment within the market?
That's it.
Yeah, we have a forecast of very strong growth this year. 7.2% for 2021 GDP growth if you take the annual average, or 8% on a fourth quarter to fourth quarter basis. So that's very optimistic. At the same time, we think the increase in inflation that we're going to see over the next couple of months for a variety of more technical reasons is going to be relatively short-lived, and we don't think we'll have a major inflation overshoot. And I think that is a mixed message for the bond market. I mean, I think at the growth side is something that should drive bond yields higher over time, at least at the longer end of the curve. Whereas the inflation story sort of says at the short end of the curve, you might not see increases for quite a long time, and we actually have a relatively dovish view on the Fed. So it's a somewhat split verdict. In terms of looking at what's been going on in the bond market, there was obviously quite a sizable sell-off from very, very low levels until a couple of weeks ago. But markets are now priced, I think, for much stronger near-term data. And so it's actually harder to shock markets, to shock the bond market into a sell-off, even with some extremely strong numbers. And the numbers we've had over the last couple of days in particular really have been extremely strong, but it just hasn't had that much of an impact.
Wait, so explain that part to me again. It doesn't have as much of an impact because we're just pricing for really near term. Is that the problem?
Oh no, the bond market has adopted a much more optimistic view of the economic outlook than it had, a month or 2 or 3 months, 3 months ago. And because of that, the hurdle for what you need to see in terms of the strength of the economic indicators is just much higher in order to get a sell-off. So even with very strong numbers, the market's actually held in pretty well.
So I guess that raises the question, like, we might see some better numbers ahead, but is this as good as it's going to get? Like, are we looking at some kind of toppiness here?
I think a lot depends on making that question very precise in terms of the sequential growth pace, the month-on-month change in, say, GDP or payrolls or retail sales. I do think that we're pretty close to a peak. I mean, April, May is probably the fastest growth pace of this expansion, leaving aside the initial bounce back from April 2020. But
this is good.
It's extremely fast. And we're getting a boost from reopening of the economy. We're getting a boost from the stimulus payments that went out in March. Subsequent to that, I think we probably will get a deceleration, but the deceleration is going to be coming from extremely strong growth to just very strong growth, and then eventually to more normal growth rates. So it's a confusing environment, I think, because these are pretty unprecedented types of numbers. We just haven't seen this in at least a very, very long time. And so you need to be, I think, very precise in terms of how you're thinking about, levels, changes, acceleration, and all these other good things.
Which begs the question, sort of, where the exceptionalism is going to be as economies reopen and we get vaccinations. So first it was...
We'll go back to the tickers in a moment, but this is a great conversation.
For second quarter of last year. Then it kind of spread to Europe a little bit. Then it moved to the UK. Then it moved back to the US. Like, where do we see growth rates underpriced that have the real potential to pick up in the back half?
I think in Europe, we probably have them underpriced. I mean, Europe got off to a much slower start on vaccinations. The virus performance hasn't been great.
All right, not so jazzed about talking about vaccinations. I know it's, don't get me wrong, I know it's important, but I get a little bored. So, I mean, really interesting. Some of the commentary here. Peak growth, maybe April, May. Peak growth, April, May. That's kind of potentially also when I feel like we might see peak inflation. So yeah, April, May, because April, May data comes out May, June. So May, June is when we see April, May's data. And May, June, that's when we're really expecting to see those bigger numbers. Yeah, let's see. I don't know. Do I have my... I wonder if I have my scribble available around here. I don't think I actually do have my scribble around here. Oh, I do have my scribble. Look at this. So here's my kind of scribble. See, this is kind of the scribble that I've drawn. And so you'll actually see here, April, May, I have the highest targets for inflation right here. Because I projected 2.4% for March. We ended up having 2.6. And I think April, May right here are going to be those high months for inflation as well. And then that's when we're really going to see potentially that slope down. And we'll either see that slope down or we'll see that increase. At the same time, we'll have, once we get that kind of reporting data, we'll also have a lot of quarter one earnings in, which will be good. Hopefully those come in strong, because I feel like right now the markets are a little bit underestimating how strong earnings could be. Because, I mean, things are just on sale like every day. It's pretty kooky right now, I have to say. It's a little crazy. So look at this. Voyager Digital down 8.5% today. My goodness, it has just plummeted from almost $30. This is at like 29 something right before IPO. Pinterest down 8.5% here. We've got Naked, Zom down again. Zom under $1 now. Sundial, Riot Blockchain, BNGO, Marathon, Open Door, Ethereum, all getting hosed with 5% declines today. Not fun. Fun if you want to buy. So I guess it depends on the way you look at it. So I got the comments over here. So I'm watching the comments over here too. I didn't see any news on pins. And that's the weird thing is some of these things are just falling. And did Jack draw that for you? Maybe. Yeah, but yeah. So yeah, I would say one of the things to keep in mind is NFT the Scribble. Oh my gosh. Well, NFT the Scribble if it's right. You know, I do have an NFT for sale, the Rareable NFT. And I think a lot of people don't know about that. YouTube, interestingly, YouTube's not really pushing that video at all. But if you go to rareable.com, Kevin, on Monday, this expires. And mine is going to charity, my half. But the creator of the Buy the Dip, we're doing a sale of this NFT. And so that'll be 50% to the creator and then 50% to charity, which I think is awesome. But anyway, you can see that again by going to Rareable. It's with an I. Make sure you spell it with an I. .com/realmeatkevin, and that'll come up. Interestingly, YouTube's like, yeah, no, we're not going to put that out anywhere. So it makes you wonder where YouTube's head is on NFTs. But yeah, look, if you're feeling crappy right now, and something you can always consider doing at least is buy a little bit more of the ones you're feeling crappy about. Yeah, I mean, it's 327. It's honestly, I mean, a lot of these feel just relatively inexpensive to me. So Roblox is having that hard time really escaping IPO pricing. It's about $10 above it right now, but been having a rough time here. Matterport getting caught up in the SPAC mess. Anything that's a SPAC, even the good SPACs, just getting wrecked right now. That's something to keep an eye on. Even if you're in a SPAC, even if you think it's good, now's the opportunity to just be able to pick it up at bargain prices, as all the SPACs are just getting lumped together in one basket and labeled bad. So whether it's already SPACed or it's about to SPAC, it's bad. Tesla down about what it was up yesterday, losing about that percent, 0.75% right now. Churchill Capital's dancing right at $20. Absolutely incredible. Let's see what else here. Tattooed Chef, by the way, is also a SPAC. It just completed a lot earlier, just like Canoe. I'm in at Canoe at 9.50, so I'm down about $1.20 right now on Canoe. Canoe is recovering a little bit intraday here. Got a small position here, about what, $42,000 right now in on Canoe. And not something I'm jazzed about. I would add to Churchill, CCIV, Lucid, and Matterport before I would add to Go EV. And I have much larger positions at the other ones. So very, very small kind of spec play there. Enphase up 2.3%. Okay, let's go back to CNBC here. Apologize for the drop, guys. I bought yesterday. Yeah. What's going on with Robinhood? Is it literally crashing right now? Really? Let's go. I'll add Playboy. Sure. Playboy. Where's Playboy? What's the ticker for Playboy? Playboy. There it is. Got it. Kind of intuitive. All right. I added it. Many people wanting it. Okay. What does Feds Wallace think?
With just temporary bumps back up to 2. So that's kind of the idea. We want it to be on average around 2%. I don't think anybody would be very comfortable if it got to 3 or 3+ and stayed there for a while. The bigger concern is if it did and we saw inflation expectations drifting up to those levels, then we've got a problem we got to worry about. So as long as inflation expectations are anchored near our 2% target for PCE, although a lot of these things are in CPI numbers, I think we're okay. We're not going to be worried about inflation being. Now, again, we're not going to just let it rip either. Inflation's not going to just take off. We're going to sit here and say, oh, that's fine.
Governor Waller, right now, when I look at the Fed futures, obviously there's a lot of noise in all that outlook there, but they're pricing in a rate hike at the end of 2022. Is that appropriately priced in your mind? And what role do the Fed dot plots or the forecast for the inflation for the funds rate, what role does that play in market expectations? Is it helping or hurting?
Yeah, I think the dot plot is kind of a problem right now. As you know, we adopted a new framework last year, which is an outcome-based framework. And the SEP was designed for our own old framework. So we're still giving projections of policy instead of saying, this is all about outcomes now. We shouldn't be doing calendar-based plots of interest rate hikes based on perceived or projected movements in inflation and output. We want to actually see it. I'm from Missouri. We take the view.
I think they all talk together and they're like, hey, let's all say the same thing.
Doing this. So I think the markets are getting ahead of themselves in terms of really understanding what our new framework is. And I don't think the dot plot is really helping us very well.
Governor Waller, they're going to kick me in the from the control. But real quickly, we had a debate this morning about the recession. Is it over? And does it matter if it's declared over or not?
Yeah, I think this is something. When I used to be a college professor, I used to teach this to my students, which is it depends on whether you're measuring things in levels or growth rates. So again, if you're measuring, the recession, are you back to where you were? We're not there. So in that sense, by levels, we're still in a recession. Employment's not back, GDP's not back to trend. But if you were looking at growth rates, then growth rates were positive back in the third quarter of 2020. So it's really a question of what you want to think of when you think you're recovering for it. So it's really important whether you want to think about it in levels, you want to think about it in growth rates. And I'm thinking about it right now in levels.
Governor Waller, thank you for joining us. It's been a real pleasure to have you for this initial interview, and I hope it's not the last time we see you again.
All right. Well, thank you, Steve. Thanks for having me on.
Yeah, I mean, the Fed's being really consistent. Let me hear their summary.
Lose your video. You can put up a nice picture of yourself, and that's a better way to do it.
What?
That was a great interview, Steve, and an important one. Thanks, Steve Leisman with Governor Waller. As we go to break, we're watching Pinterest this morning.
Okay, they're not going to give a summary. Wait, Pinterest.
Already surpassing the 30-day average on volume, gets you back to about the earlier part of the month. We'll keep an eye on that. In the meantime, we're back in a moment.
Yeah, why Pinterest is selling off, I don't know. I'm going to go look at news on, let's see, I'll pull it up here. I'll look at news on the Bloomberg terminal here. Not exactly sure why we're having the sell-off on Pinterest. I have not seen any kind of news so far. Let's see here. More importantly, it creates an opportunity if it gets under 70 again, but let's go ahead and pull it up on term again here. Pins. Let's try to understand what the heck is going on here. So let's see here. So if you joined a little late at the beginning, okay, here we go. Pinterest shares drop as much as 11%. Pinterest, why? What Q1 preview maybe? Did they do a press release? Maybe. Let me do this. Pinterest press release. But yeah, if you're just now joining, keep in mind at the beginning I started talking about this potential SPAC regulation, casting a lot of doubt on SPACs right now. And I don't see any. Well, let's see. Investor relation. Pinterest. Oh, here we go. Let's find out. Do we get a release here? No. I mean, the most recent press release was on the 13th, but the terminal seems to have something from today. No, this is just a preview from the terminal. So there's really no indication here of any company news. Down 7% here right now. It's recovering in the day. It's recovering as much as Voyager is falling. Jeez. Wow. What craziness. Playboy. I wonder how has Playboy been? Well, Playboy's actually been doing very well. Look at that. That's incredible. Playboy's brand recognition kicking butt. That's awesome. Yeah. Playboy going from $10 to just absolutely destroying it here since April. April going from $15 to $40. Wow. Really cool. Good job, Playboy. Still red today, but certainly doing way better than a lot of this consolidation we're seeing in so many other stocks right now. All right, what's kicking butt today? Clover is actually coming back. Clover's had a painful moment there. Let's see here. All right. Oh yeah, and how's Dogecoin doing? We'll zoom out on Clover in just a moment, but let's put this on the watch list here. All right. So we're at 37 cents, 38 cents on Doge. Clover, we're definitely testing bottoms here. Yeah, we are at almost all-time lows. All-time lows on Clove were around 631 there at the beginning of March, sitting up 9.66% right now. Big digital assets up again. I had a good interview with the CEO. I really enjoyed that. I had some nice growth here over really April. April, this is essentially doubled in April. Also incredible. Enphase up 2%. Just really playing this line, though. Kind of boring right here. Boring play of the line. Coinbase can't stay over. What do we got? The 320s. Really stuck in the 320s here, which is lower than what the thing was selling for in the actual private market, which is also a surprise. That's not going to bode well, I think, for future IPOs. You've got Walt Disney up 0.65%. What else? GameStop. What did I just see GameStop here? I see CrowdStrike. Where's GME? GME. Let's see what we got. 0.58%. Let's do, we haven't done this in a while. Let's go pull up some short interest. Definitely haven't done this in a while, and it'd be worth pulling up. So let's see here. If you are in the course, you can also ask, oops, Black App. Let me pull that up. Let's get the correct one here. Black App. Let's pull it up. Let's see what we got. All right. So I still see more complaints, by the way, about Robinhood. Is it still having issues? Yeah, we'll definitely look at the short interest for coin. All right, we'll wait for this to come up here. Crazy times. Lots of folks saying algorithmic trading is just continuing to draw things down. Robinhood, another alert here, experiencing issues with crypto trading. It's probably because so many people go to Robinhood and it's like, all I want to do right now is trade Doge. They must have just such a disproportionate share of people wanting to buy whatever is the most popular thing at any given time. I mean, I'm not trying to make excuses for that. Just it's gotta be tough just to predict the momentum swings. All right, look at that. Lucid is actually 17.9% short. Let's look at coin. All right, so let's go coin. Coin, short interest on coin. Yeah, having just IPO'd, it's only showing at 0.3%. So we really, I don't even know if we have data for it when it just shows that. No, it's actually not showing me anything. No, forget that with the 0.3%. It's not showing me anything for short interest. So this just must not be updated yet. So maybe we'll have to check that one on Monday. Sundial. Oh yeah, we could look at some of the other momentum swings here. 15.9. Clove. Oops, didn't mean to replace Sundial there, but oh well. Oh my gosh, what? No. Clove? Is that possible? 100. I mean, this is like a GameStop. Look at that. 148% short? No. What? That makes me curious. That's super high short. Holy smokers. Wow, Clove. That's nuts. How? Hold on. Let's look at Clove here. Clove. Hold on a sec with other requests here. Let's look at Clove for a second here. All right, let's see what we got. All right, the company offers Medicare plans, have all the essentials like hospital coverage, doctor visits. Okay. So we're gonna know more about this company, Clover. Clover Network. Is this the same thing? Clover, wait, no, that might be different. Clover Health. Clover Health, here we go. Clover Health, ready for a Medicare plan with more. So it's a style of insurance coverage. Okay. So it's an insurance provider. And we have negative earnings through 2022. Where'd the black app go? Here it is. This just seems high. Let me look here. I'm gonna look at Yahoo Finance here really quick. Give me a sec. Clove, CLOV. That's very, very high. I'm sure. I'm shocked by that. Trying to look at some projections, maybe. Yeah. So right now, let's see. Pull it up here. So this is Clove on Yahoo Finance. I'm shocked by the amount that it's short. And can we get to any profitability here? Let's see. The EBITDA margin continues to be negative. They have no path towards profitability right now. But the short interest is extreme. Listed as overvalued. You have any more information? I'd like to get some projections from Yahoo. I don't think I'm going to get any. Let's see if we can get their balance sheet. Let's go to investor relations on it. So Clover Health Investor Relations. That's pretty high. I haven't seen that high of a short in a very long period of time. Let's see here. SEC filings. Let's go ahead and pull up. Let's see if we can learn a little bit more here. So let's see here. Here's somebody who, what did they do? Shares. This is trying to see. The formatting of this is pretty crappy. Okay, so this looks like somebody has number of shares the person has. Okay. Does it say if they bought or sold? I think this is just registering what they have. Okay. Initial more than 10%. Statement of common ownership. Post-effective amendment to S-type filing. No, we don't really have a lot of news here. 8K amendments. Report of okay. Let's look at their annual report. Let's see here. We could even see if they're talking about the shorts too. Which we'll do that in a sec. I just want to get to their sheets. Oh my gosh, why do they got to use this word so much? I should have used a different word. Come on. Give me what I want. Oh, I'll just hold it. Trying to get to their income statement. They go through lots of risks. You know, another thing we could do is we can punch in to see if they mention shorts in here. No, I've gone through this twice now and I haven't seen it. Revenues, maybe? No. I don't know. Cash? Geez, where's their sheet? I'll just do a manual scroll. Trying to get some data on these folks. Okay, hold on a sec. Let's listen to CNBC for a sec. Background here.
You know, first of all, we think it's important that we treat our employees well. A typical Red Lobster server is already making
Red Lobster
over $20 an hour, you know, including tips. But it is true that consumers are very value sensitive right now, and it is very difficult to pass through cost increases. You know, we actually think consumers are coming out of this caring a lot more about value and convenience than they were before the pandemic. And I think every business is going to have to do a really excellent job on both of those things. In our case, for example, we've introduced a number of new menu items recently that are affordable but terrific, like our bacon Wagyu burger, our new crispy.
All right. Well, I mean, Red Lobster, I'm excited to go back to a red restaurant, but yeah, we're going to back off this just for a moment here. So what do we got here? So they've got 28 mil in cash. We've got, let's see here. Let's see what else is going on. Okay. Sorry, give me 1 second here. Let me put this in here. Darn thing. I want to look at this company a little bit more. I'm shocked. I haven't seen this high of a short really since what, GameStop? And that's crazy to say. All right. Hold on. Give me 1 second if you don't mind, because I do want to look into this. But I got this little thing that popped up here really quick. Okay. There we go. All right, that should work. Okay, good. So they got 28 mil in cash. We've got, let's see, 20 mil cash. Marketable securities. How do they have this much money? Marketable securities of $828 million. What are their liabilities? Their liabilities are 62 million. Nothing. People have a ton. Oh. I just don't know enough about this company. It's tough. But why is it so shorted and they have so much money? I mean, what's their, can we get a book value of them? Well, actually, yeah, we could just divide here. So how do they have, I mean, this is at the end of the year. How do they have $856 million? Did they SPAC? Maybe Clove was a SPAC. I don't know if it was. Maybe somebody in the comments can tell me. Is Clove a SPAC? Due from investors, $856 million. And they've got, how many shares outstanding? Let's see. Shares authorized. Okay, 20 outstanding. Here we go. 20 million. So they have, and 1 shares issued and outstanding. That's of B's. And of A's, they have 78. So they've got about 100 million shares outstanding. 856,420 divided by 100 mil. That's like $8 a share. Their book value. I feel like they're trading at book. Am I missing something? Is this company trading at book value? Can we see that here? Ratios. Book value. Can we pull that up? Book value. Or just book. I've never done it on Bloomberg. I'll just Google it really quick. Clover Health book. It was a SPAC. Okay, thank you. Clove is a Chamath SPAC. Really? Leading book. Yeah, current price to book. Clover Health. Okay. Price to book. 38. Really? As in, I don't know about that. How much did they get rid of a bunch of their cash or something like that? It seems super low. Why is this saying price to book is 597? I think nobody's I think this is so weird. This is the weirdest company ever. This is so bizarre. This is very, very weird to me. Yeah, that's odd. I want to look at this one more time just to make sure we have this right. Yeah, I mean it's not wrong. That's what it is. And if we grab, where is it? The sheet right here. The cash they have on hand is insane. They're just losing money is all. Yeah. I mean, we could look at what's the latest update for cash on hand? Let's see, amendment to 8K. We could pull the April Fool's update here. Consolidate cash flows. Current assets. Okay, well, this is different. See, here we go. That's a lot different. Why is this so different? Clover Health Investment. Where did all that money go? Where did that $856 million in trust accounts go? See, look at this. Now it's gone. That's weird. This is a very bizarro company. Now here in the 8K, total assets are way lower. Total assets are at 267, and total liabilities are higher. doesn't even make any sense. We just downloaded this. Yeah, this was a Chamath SPAC. Where'd all the money go? That is weird. Maybe that has to do with the SPAC accounting or something here. But see, even the shares outstanding is different here. I don't know. This is weird. And look at that. Their revenues are basically rounded to 666. This is weird. Chamath got paid. Wow. Why isn't he just reading? Let's see what you guys say. Let's see. SPAC payment plus conversion. Really? That much of it went away to the SPAC payment? Seriously? That's bizarre. According to the SPAC pricing, yes, but we really don't know. Okay. Huh. That's why Chamath blocked you. He was being attacked by shorts. Jeez. Short report? This is weird. Huh. That's very, very strange. Okay. So say they paid out for the SPAC. So now they're upside down. Now they have more liabilities. So they have more liabilities. We don't expect them to be profitable for the foreseeable future. Like the company itself as a like a long play, I mean, at least right now from the initial read I'm getting here, isn't like jump up and down exciting. But from the perspective of solely from, hold on, total expenses. Yeah, see, I mean, they're net losing money here. So they could have to raise capital. I mean, they're losing $3 a share right now. That's high for the year ended 2020. Let's see if we have any. Okay, cash and could. Let's see if we have that trust information on the trust. Here, to reflect the release, here it is. The release of $790 million of cash. Why? Pro forma adjustments. Where would all that money have to go, though? Conversion of $413.8 million of outstanding principal. Oh, into shares upon business combination. I see. Okay. So maybe the SPAC gave him money for a day or whatever. And then that money turned into shares. Maybe that's it. Yeah, the SPAC conversion process is complicated. I don't fully understand it. I've never done a SPAC, obviously. Weighted shares outstanding. Oh, yeah. See, now they have a ton more shares outstanding, too. I see. Okay, now they have 404 million shares outstanding. Okay. This makes a lot more sense. This is why the amended report is so different. Jeez. Okay, so that explains the difference. So it's going into the SPAC. All right, what a mess. So really, you've got like 440 million shares outstanding. And the thing's upside down, has more liabilities than it has assets. And it's got negative. I mean, it's not like everything about the company doesn't look good. The only thing that looks good about it is the short interest. The short interest is absolutely insane. And I think we're getting, I mean, it doesn't surprise me. I mean, do we just buy it as a way to as a way to screw the shorts? It's going to tank hard. I mean, maybe. I mean, just in the last 5 minutes, it's been up like 5% or whatever here. I think just for the lulls, I'll buy a little bit of it for the lulls. Okay, this is totally a short-term trade for the lulls. Let's go. I don't know. No, not that much. Let's see. Oh, stop it. So slow at executing on these things. I don't know. I'm going to get ripped off. But I'm going to do it. Just for the short lulls, okay? Just to stick it to the shorts. That's what we're doing. So we now have, by the way, in the course too, when I do this during the day, hold on. For the lulls as a trade, 60K and clove. Okay, so negative. Okay, so yeah. Anyway, what was I saying? Oh yeah, we have different segments now in the stocks and psychology money group. One where I just throw in random trades, and it's just literally like this is just a short-term day trade or swing trade, and I guess I shouldn't really call it random. And then another where I talk my long positions, like what am I buying long? This to me, I mean, I think I probably just got ripped off on the pricing on it, but that short interest is insane. That's insane. I mean, fundamentally, I don't like what I see here. So I want to be very clear about that. Fundamentally, I don't like this. Fundamentally, it's not so good. Oh look, Doge is at 38. So fundamentally not great. I mean, you've got negative earnings for years. You've got more liabilities than you have assets. It's part of the SPAC disaster, and SPACs are just getting wrecked right now. So, probably pretty stupid, but you have this potential short-term, maybe short squeeze, and I think a lot of folks are going to just be interested in it solely because of that, and I don't blame that idea either. And Clover Health, it's 148% short. That's nuts. And it's been, it was 38% short. I feel like the last time we looked at it, when was that? Let's try to look at this a little bit more detail here. I can't really see it right now. I don't know why. What if I zoom out? Nope. Can't get the darn thing to work. Nope. Darn it. I'll look at some other shorts as well. That's bizarre. There we go. Okay. Oh, yeah. Even just here at the beginning of April, we were like 34% short, 35% short. GME is sitting at 20% short. How did all of a sudden the S3 float go to 60% and the short interest go to 148%? Oh, here, I'm covering it up. Here, take a peek at that. That's weird. I don't know. Yeah, dropped because of a short seller report. Well, that makes sense that it was heavily shorted then. What's the history been on the thing? Clove. So let's go back to the day chart here. Gosh, yeah, it's just been in the toilet. It's just gotten destroyed. Oh, well, we'll see what happens. I mean, we'll keep an eye on that short interest too. I think that's what we'll do. So make sure to subscribe and we'll pay attention to the short interest. That's very interesting to me. All right, let's get off the Clove talk. I'm nervous to look at, let's see. Let's look at some of the other ones. Who else wants me to look at something else? Nano Dimension. Skills. Yeah, we could look at that too. Nano Dimension's only 4.99. I'm grabbing these from the course right now. I think GME, it says right here, it's 20%. Yeah, 21.8. Matterport. Usually the SPACs don't have a high short interest. Yeah, totally a YOLO on Clove. Okay, 1.74 on Matterport. So Sens you avoid Sens like the plague? No, I never said that. Let's see here. Yeah, Sens is at 28%, 28 to 22%. What else do we have? MViz? Sure. Let's see what we got. Okay. Is Clover a 420 play? That's a good one. Okay, so Microvision's at you could see, well, actually see Microvision's at 18.1. You could look right here. You'll see right here. I know it's a little small, so I'll try to read it out as well. All right, I'm just going to do a few more because I want to go back to the sticks too. Neo, look at AMC. Yeah, Neo is at, what is that? 4.96, pretty low. Let's go to AMC. AMC is at ASO. ASO, I just got flagged here, is at 39%. But I mean, AMC is at 21%. Tesla? Sure. Let's see what Tesla's doing. Let's see. Tesla's at 5.94. Okay, any other symbols? SOS somebody wants here? Shift? Sure. Shift has, I thought, been pretty low. SOS 16.14. I'm just gonna do a few more. I said I don't want to do this all day. Big Digital. What's the ticker on Big Digital though? So you got to give me the ticker on Big Digital. It's got an odd one. EHang. I know EHang is EH, but yeah, EHang was a momentum play. It's really a 2030s company though, right? I made some money on EHang though. That was a good day trade I did on EHang. I've been better at day trades than longs lately. Now, I'm not worried about my longs. Don't get me wrong when I say that. Like, all my longs, I just think I'm getting bargains on these things. Because I personally believe, like, anybody who's like, oh my gosh, Kevin, your longs are down. It's like, fine. Talk to me in 6 months. I really believe that. I believe that. It's not BIGG. It's something else. But yeah, it's short term. It's painful. BIDG. Big. No, see, big is BBK, unless you literally want big. Maybe I'll do both. BBKCF. BBKCF. Maybe you literally want big. So this one's at 5.4. And just for the, why not? See, Big Tree, I don't actually have data on. Palantir, sure. Palantir. Oh, skills. I did say I was going to do skills. It's only 7% on Palantir. What's the ticker here? Skills, Riot, and Marathon. Yeah, maybe. Where's the skills ticker? Dang it. Hold on. All right, 3 more. That's it. Skills, Mara, and skills, Marathon, and Riot. That's all. That's all, folks. That's all. Okay, so 16% on skills. Mara is Mara, whatever, 5.69. Riot. 37% on Riot. Wow. Yeah, that's interesting to me. That is. Okay, so we'll keep an eye on Clove. Again, as a long fundamentals, I don't know. I don't know about that one. But in terms of screwing the shorts, I can play that game. It's a dangerous game to play, but I can play it. All right. Focus, Kevin. Focus. I got to focus. I'm not focusing anymore. This is what happens later in the live streams. We just start having too much fun. All right. What else we got? So, all right. Discovery, Pinterest, Voyager. These guys have actually stopped being as painful. Little bit of a recovery in the market. Yeah, a little bit of a recovery here. This is what we got. Not everywhere. but definitely some things are showing somewhat of a recovery. MP Materials pretty bouncy here. Matterport, yeah, Matterport's recovering a little bit as well. Tesla's still down 3/4. Churchill went positive. Oh my goodness. Very good. It's only at 1%. Yeah. Clover's at 21%. It just wouldn't shock me at all with that kind of short interest. I don't know. Like, I think you could probably see a big move there. And I have no idea. But it's the lowest it had gone. Let's do a little bit more TA on it. So let's go to the hour chart for TA here. So we previously ran to 942 a few days ago. And then we kind of slowly deflated again. We've kind of been on this down trajectory for a long period of time on Clove. This is the hour. Let's go back to the week here. Clove historically has gotten to a high of like 13. $10. Oh no, here we go. Went to 17 for a period of time. Yeah, okay, so that's its high. This was its high flyer over here. It was between 17 and 14. But it's really at near all-time lows over here in the 8s, I feel like. Because let's draw a line at where we bought the thing. What, like 870 or whatever? I just want to compare. I know this is like after action, but whatever. 8 something way up here. Yeah, so a little rich maybe where it was bought just recently, but that's okay. So what was it, 870, something like that? Yeah, like right there. Okay, so let's zoom out a little bit. So comparing that pricing to the day chart, we haven't really been under that. No, we've barely been under that. I mean, in fairness, in the history of the stock, it's never been as low as it has been in the last month here. It's just been getting wrecked the last month. I also don't think we have the capacity to go down to 631 again, because that was when we had the March crash. So, is it possible that this thing bobs back down to support levels around maybe bounce off like a 690, maybe like a 713? Yeah. So I think the downside risk is probably what, at 870, maybe a $1.50 downside risk. But I think the upside is potentially, as much as a double, but no guarantees. That's the highest we had ever gone, would have been about a double. All right, now they're talking about SPACs and IPOs again. Let's listen in on this.
And what does it mean for tech darlings like Robinhood, which already face headwinds from potential regulation? That's where we'll start with Jason Calacanis, tech investor, Inside.com founder, Robinhood angel. Jason, I remember, what was it, a year and a half ago, Bill Gurley was gathering with investors in Silicon Valley saying direct listings are it. They're for everyone. They're the future. I mean, that's not what's happened here. Is it a better public debut and IPO market than it was, though?
Well, I mean, we had an IPO window that was closed for, what, a decade? And the idea that companies would go public, during that 2010 period wasn't even on the table, and we weren't even talking about it in Silicon Valley. And, Bill's been at this for a couple of decades, 3 or 4, in fact. And, we now have this opportunity.
This is, by the way, the guy in the Chamath podcast.
And what a savvy founder does and what a savvy board of directors does is when the market is hot, you raise capital and you deploy it when the market is not hot, right? And so the smart move is really to raise money now and deploy it whenever there's a pullback. Those dollars that you raise now could be worth 2 or 3 in the future. And we saw that at the dot-com bust. We saw it in 2008 in the Great Recession. So here we go again. We're at a peak market, and it's going to correct at some point. And the smart move is to get public now and to ride it out. So now that we have 2 choices, direct listings and SPACs, that's nice that there's
2 more
multiple
choices.
options.
Is it healthy? Is it good? Because, I mean, I see companies coming public through SPAC, it seems to be a lot of the smaller companies usually. I mean, Grab's an exception here. There have been a couple other exceptions, but it's the type of companies that 20 years ago we saw coming public early in their life. And yeah, ordinary investors had a chance to do some analysis, maybe make a good buy. Like everybody looks now at Amazon, and even Jeff Bezos was touting in his shareholder letter, you know, the couple that bought it really early. I mean, sure, there are a lot of bad SPACs out there, but there's some good opportunities.
Yeah, absolutely. And you know, people are looking for some kind of alpha, some kind of return. People want to get big returns. People are not interested in making 7 or 10% a year. People want to make 7 or 10% a day, a week. We've kind of lost the script here. And so,
hey, tell us more about eHang. I appreciate you're an aerospace engineer and understand the potential and fundamentals. Tell us more.
Fisker failed 2 or 3 times, and now they're SPACing again. Like, how many times does that brand need to fail for people to not buy the stock? And I'm not dogging just on them. There is a...
Wow, Mike thinks Doge is going to 420 on 420, and Tesla will announce you can purchase with Doge. Wow.
Ford and GM and everybody catching up there. So, you know, buyer beware, do your research. And if you want to play in the private market game, in overvalued SPACs, and many of them are overvalued, you better be in it for the long haul, and you better do your research. And now, if you're buying Netflix or you're buying Disney, and they have 250,000 people subscribing to their, service, you can feel a lot more secure. So this is the great education that has to occur, and that's part of what CNBC and these online discussions. This is why they're so important. Is for us to say, Netflix and Disney are different than Fisker and Nikola. It's very, very different. When a company does not have a product in market and they become worth billions of dollars, right, like this company, Theranos, I always save this t-shirt, it could be a fraud. It could be a zero. It could be incompetence. Or, maybe there's a chance that you happen to hit lightning in a bottle.
Right, and some key differences, right, between the traditional IPO and the SPAC. So, Jason, for SPACs, who's doing the due diligence, or who should be?
Yeah, well, I mean, obviously, anybody who buys the shares and anybody who's involved in the company or anybody who's involved in the deal should be doing diligence. So everybody from a retail investor
what about the
to the promoter.
Role?
Yeah, of course, the promoters are super responsible. And so,
but
if
Jason,
you look at somebody, hold on. You asked me a question. Let me finish the answer. If you're looking at somebody like Chamath, who is active and who is at the top of his game, and obviously we're besties, so take it for what it's worth. There's somebody there who's going to be keep working on this for 20 years. Then you have people who are retired or who are celebrities, and those people are very different. Yeah.
Okay, but Jason, you bring up Chamath. And so he was the sponsor. He did a lot of this due diligence, but he's also selling shares. The person doing due diligence is also the one selling. Isn't there a conflict of interest there? Do you think that there needs to be a longer lockup period? You say that he's in it for the long run, but it's not really putting his money where his mouth is.
Well, I mean, I think it probably depends on the company, and all of this is public information.
Well, I'm talking
right?
Virgin Galactic, and you saw Richard Branson do the same thing.
Right. So I think if you see a company where people are selling, you have to dig into that and understand why they're selling and if they're bullish on it or not, or things have changed. So Goldman's taking companies out, Morgan Stanley's taking companies out. Everybody's going to take companies out. And then, it's a great idea for people to have to hold for a period of time. Sure. And that's part of this push and pull, in the ecosystem. Me as an early stage investor, I really hold my positions for 10, 20 years. And so people who want to be an LP in my funds or work with me know that I have that philosophy. Other folks are taking things public. They bring it to market. It's up to you to determine if you want to be in this. And so the things that get me concerned is obviously not Chamath selling some of his Virgin position because he's doing so many other deals. I would be more concerned about a celebrity or a retired person coming out of retirement to get that one last payday on a company that doesn't have a real product or doesn't have customers. So, but it is your responsibility.
Yeah, Jason.
I know talking about personal responsibility is something we don't do anymore. But if you're buying Bitcoin or Dogecoin or SPACs or any stocks, it's your responsibility. Just like it's your responsibility if you go to Vegas and you put it on black or red on the roulette table.
It's a great point. I mean, we're here to help you understand, but we certainly are. We don't want to be in the business of being a babysitter. You're gonna make those choices for yourself. I do want to ask you. Coinbase was yet another example where viewers wrote in and said, "Aha, here we go again. A name that I would have loved to have gotten into earlier. Instead, I'm gonna have to watch it pop $100 at the open, and it's gonna be too expensive for me." You talk about risk tolerance. What do you tell those viewers?
Buy now.
Yeah, I had this conversation recently with somebody very close to me, and I said, if you love the company and you were going to allocate $10,000 for it and you're passionate about it and you believe you're going to hold it for a decade or two, dollar cost average, you could buy it 3 or 4 times over the next year. We know these things are volatile. We saw Uber, which obviously I was very connected to, go down to $15, back up to $60. This is a pretty volatile market. And if you believe in the company, you believe in management, slowly get into the company. Now, you look at something like Coinbase, Brian Armstrong is the real deal. He has been an advocate and he's made cryptocurrency really easy for people, right? So he has really done a tremendous job there. But keep in mind that there was a perfect storm for Coinbase. Stimulus checks being dropped everywhere, people not being able to bet on sports, and a pandemic where nobody could go out and spend money on a vacation. That's all going to reverse, right? So now we're going to have the opening. People are not going to be spending their money on crypto as much as maybe going to Coachella. And so that crypto to Coachella transition could be bumpy for them.
Yeah.
But I do think they will be I do think there's a chance
Jason.
they'll be Google. They'll be Google.
But
they'll be the Google of crypto.
I keep hearing that, and I push back with, how do we know they're not the Yahoo or AOL, because they are early. And I wonder this about the narrative, because you're an investor in Robinhood too. It seems to me that part of the Robinhood narrative is the retail investor doesn't like fees. Easy access is good. The competition is good, right? But then on the same at the same time, you've got Coinbase that's got some pretty high fees. And the argument is that somehow they're going to be able to maintain that and maintain the margin. Can both be true, or is there going to be this difficult period where Coinbase is probably getting hit on those fees decreasing from competition, and maybe it's not clear yet what platforms they're going to be able to build on for the future?
Yeah, there's really 2 parts to that question. One is like the cult of imaginary money, and can that sustain itself? Is it a giant Ponzi scheme, as some people believe, or is it the future? Let's put that question aside. To your point of, is it Yahoo or is it Google? Is it Tesla or is it Fisker, et cetera? I think as long as Brian is in the pilot seat, this is a Google, this is a company like Facebook with Zuckerberg, you have that founder authority. You mentioned AOL and Yahoo. When they took Steve Case out, when they took Jerry Yang out and David Filo, those companies were run by professional managers who ran them into the ground. And I think Yahoo had 5 CEOs in 6 years or something insane like that. So I always look for the founder authority. I think that's the big tell. If you have a founder running the company, Steve Jobs, he leaves for Next, he comes back, you see the correlation. So as long as Brian's running the company, I would be pretty confident in it. But I do think there's 2 games being played here simultaneously. There are people who've been in the markets, and we look at them as like this, beautiful cathedral with rules and decorum and a process. And I think CNBC and the venture community and private equity, we all kind of fall into that bucket. And then there's people who look at this as betting and recreation. And they are playing a metagame. They look at shorting stocks and coming over the top and GameStop and Dogecoin. This is all a big joke and fun to them, and it's gambling. So they're betting on sports. They're in a casino having drinks and having fun, and we're all taking it seriously for our retirement. And these 2 things are happening at the same time, which is why there's this confusion.
Jason, that's a great way of breaking it down. I give you credit for that one. Is there anything more representative of that betting recreational sort of fun side of gambling or playing the market than Dogecoin, right? We've seen this enormous spike this week, but I wonder, are there people who aren't understanding the joke, whether that be on the institutional side, who could see this as part of a problem with the wider system, or, the retail investor side that think it's an actual investment?
I have been on CNBC with you sounding the alarm, asking people to please be careful, to keep 1% or 2% of their net worth in these things, not 90%. We have Pomp on, who's a Bitcoin maximalist. He's got 98% of his net worth in Bitcoin and just one cryptocurrency. Like, my message for all those folks is buy your house, put the maximum amount into your 529 and get your kids' education paid for. And then, make this half or a third or 10% of what you're doing. But, you can't stop people from doing what they want to do. This is a free economy. You get to place bets if you want. And part of the fun they're having is watching us react to this. They love the fact that we're sitting here going, why would you buy AMC and GameStop? These companies are dying. It's a pandemic. This makes no sense. They like that. And now it's become manifest destiny. AMC is going to raise a bunch of money, and GameStop might actually figure this out.
Yeah.
So now it's become this crazy cult religion, and they're empowered. So what are they going to do next? Bring back the Palm Pilot? I mean, it's getting crazy.
Hey, it could happen. and never said it wouldn't work. Just said recognize the risk. That's the beauty of the market. If you see the chance, you can take it. And you, Jason, always keep it 100. Love that. Love to have you help.
Buy Disney. Buy Disney. Please own some Disney. It's not going anywhere.
Yeah.
Captain America will be here in 50 years.
Says the angel investor. So you do your share of risk as well, Jason. Thanks.
Yeah, I like Disney too.
Thanks, everybody.
That
was good. That was fun. That was a fun interview. Yeah, I mean, he's got some really good points. I like his thesis. Look, you invest for 20 years, and it's one of the things I talk about too. Is look, if you're gonna buy shares, you should have almost a written strategy, which is I'm gonna buy something, and it's a trade. That's one thing. I'm going to buy something and it's a long hold, then let it be a long hold and don't worry about pricing in the short term. We've got, let's jump on over here. So we've got, Pinterest is down rough today, but long hold for me. And it's over our targets of $70. I like buying it under 70, so it's still fine. It's obviously given up a little bit of the excitement here recently. Playboy's down a bit, but it's also up a lot in just the last month. Really incredible when we saw that. Saw Marathon down again here. Bitcoin plays, or crypto plays, I should say, not doing very, very well here. Let's see, Square's even down today at 1.85%. Lemonade's at 86. Hey, we're almost at 90. Let's go. Or sorry, 80. We get to 80. That might be interesting again. Palantir's down again now, 22.83. Wow, lots of pain in the market. Look at that. Tesla is accelerating its losses here, now down at 0.85. Matterport down 0.7. What else here? Apple down about 0.4. Churchill was green in the day. Now it's red again. It's incredible, just the amount of movement and fluctuation we see in this market. Really incredible. So Coinbase. Oh, hey, look at Coinbase, though. And Clover, which we found out now is 148% short, which is kind of crazy. But Coinbase up 4.5% all of a sudden. Nice run finally at Coinbase at 337. Never really got down to my my ideal of 315 to average down a little bit more. 322, 321. Yeah, that's kind of where the thing just been bought. Look at that. Got to 318 for a hot minute. 317, 317, 316. Oh, in the aftermarket, 315.62. Never hit my number though. Never hit my execution of under 315. That's funny. It got really close. Oh well. Well, now running a little bit. Cool. All right. Awesome. So, yeah, I think that about does it for today. So, folks, thank you so much for being here. Appreciate y'all. It's always fun having y'all. Super weird on Clove, by the way. I just have to say 148%. That is, why is it so short? It's already so cheap. How could it be so short? I don't know. I don't get it. Anyway, folks, thank you so much for being here. We will see you in the next one. And that'll be when the market closes. Thanks. Bye.